Hello, chaps. Hello. Welcome back. Greg Sulman, Tower of London. Mum. I hope the mum is okay. The Queen. I hope she's okay. No, she's taking some time off. Listen, this is Greg Sulman, guys and gals, for CIOs and bow ties. This is our Come Learn With Me section, subsection of which is uranium and nuclear. We are growing ever more bullish on the space as the fundamentals are lining up, as the world is itching to decarbonize. We see the only baseload fuel, the baseload power source, and baseload means always on, as being nuclear. It has its problems, make no mistake. So this is our Come Learn With Me section. We're looking for anything uranium focused. Obviously, uranium is a high density fuel used by nuclear reactors. We were fortunate enough to participate in the last bull market back in the early 2000s, where we speculated on some smaller uranium deposits in Australia. But we foresee potentially another one. And if there is another one, we want to be ready for it. If you want to learn about how we're implementing our investment program, stick around for the end of the article. We'll flash up a little URL. Okay, this one is from the Standard, good Canadian rag. And it's talking about uranium miner Cameco reports $72 million loss, Q3, 72 million Q3 loss, revenue down from a year ago. Okay, that's interesting. So I was recently listening to a webinar where they cite, new resources coming on tap for uranium. So this dovetails into this well, because Cameco is a uranium miner. I believe $60 per pound, and we're around about $48 per pound is when many new reserves actually become economical to start mining again. It takes a while to start mining them again. And many players, won't wait for $60. They'll wait for 60 plus just to make sure that they do open up again in a positive economic scenario. All right. Saskatoon, Cameco Corp reported a $72 million loss in its latest quarter, compared with a loss of $61 million in the same quarter last year, as its revenue fell 5%. All right, no bull market here, chaps. The uranium miner says the loss amounted to 18 cents per diluted share for the quarter ended September 30th, compared with a loss of 15 cents per diluted share a year earlier. Revenue totaled $361 million, down from $379 million in the same quarter last year. On an adjusted basis, Cameco says it lost 14 cents per diluted share for the quarter, compared with adjusted loss of 20 cents per diluted share a year ago. Analysts on average had expected an adjusted loss of 4 cents per share at $398.9 million in revenue. So they missed on the revenue side. Oh, they missed on both sides, actually. According to the financial markets data firm Refinitiv, Cameco shares were down $2.25 at $29.20 in early trading on Toronto Stock Exchange. This report by Canadian Press published October 29. Okay, so not a huge amount of info here, but nonetheless, good to keep tabs. Well, he doesn't look happy. Yeah, good to keep tabs on one of the largest uranium miners out there. I think the biggest one is Kazatomprom in Uzbekistan. But so interesting, and not much to read here. So there's still a lot of uneconomical reserves out there which haven't been tapped, and hopefully they will as demand increases, and certainly the amount of nuclear reactors being built around the world portends to higher uranium prices. So stick with us. I did mention how we would tell you a bit more about our investment process and our investment program. If you follow the URL right there, that takes you to our investment site. We do most of our investing in private markets, where you require some form of accreditation. So you will have to register for our site, but generally we get in really early into some of these opportunities, and we try and build a company or a land package. And ultimately, if the market really heats up, excuse the pun, we will seek to exit via IPO. So come check it out. Love to meet you, love to learn more about you, and to share what we do on the investment side. Greg Silverman, out for now.